As the S&P 500 goes, so goes everything else. What is everything else? The NASDAQ, the Russell 2000, the Dow, all of the markets. It's why we always keep very close eyes on the S&P 500. You are looking at a specialized price chart, just price, of the S&P futures market, which is a leverage market, which gives us insight a few days in advance to what everyone else is playing. This chart goes back some 6 months. Let me take you over here and introduce myself. Today is Saturday, August 10th at 8:15. My name is Don Marshall, founder with my beautiful wife Susan of StockmarketCaddy.com. Now let me just share with you a couple of things, and I'm going to walk you through very briefly some Fibonacci's that will show you where we've been, where we are, and where we might be going. But before we do, I want you to know we are not a broker or a financial advisor or a money manager. We are a mentor for those folks that want to learn how to minimize the emotions of fear and greed by maximizing their profits and time through the use of technology and algorithms. Rules-based trading, intraday, swing trading, and yes, even investing. Now let me show you some Fibonacci's and let's take it apart. This particular chart is a Renko chart. It is a price chart. We want to track price, price, price. In real estate, it's location, location, location. In trading, it's price, price, price. Everything that you see here, this writing, this writing, this writing, this writing, is done by the computer. This is our trend caddy, our 4 caddy, our divergence indicator, and our brick value. These little lines here are the swing points drawn by the computer. These little dots here are our buy points, C point buy, C point sell. This has been drawn by us, and what you want to know is, how did I know to put that there days ago as the bounce zone? And what makes me think that this might be the target zone? Well, let me show you a little tool that we will do. Let's go back in time when we had this swing point and we're moving down, and everybody, maybe even including us, would have thought the market might give us a shallow bounce and continue down. But it didn't. Because you see, folks, one of the lessons that we learn in trading is that this is a game of probabilities. It could go one way, it could go the other. And what we're always doing is mapping out the price action so that if the trade goes against us, we exit the trade and keep our losses small. We want no negative outliers. We want positive outliers. Now I'm going to take a Fibonacci tool, hopefully from TradeStation, and this is called a Fibonacci retracement lines right here. And we capture this point and we bring it down. And the area that we're looking at happens to be mostly, it's not technically a Fibonacci number. This is the 0.38, this is the 50%, this is the 60%. When you have a move down and then get a bounce, you do not want to see it go over the 618 retracement at all. Ideally, you want to see it pause at the 50, right here, at 52.16. And you notice it did here, and it sucked in some shorts, and then it held, and then it broke through. That was the indication right here that this move down was now over. And now we're in actually an up move. Now let me remove this Fibonacci here. I'm going to remove it. And now we have an up move, and we can do the same thing with the Fibonacci. And let me come in and now capture the Fibonacci retracement line. I capture the low, I run it up here, and I do the same thing. We now think prices are headed up, and we're looking in. What does she do? She comes back to the 0.38, she holds, and then she starts issuing buy orders. And yes, she's breaking out. So that's when we had that big run, right? That's how we like to use those Fibonacci's. So let's take that off for a moment. And now we begin to see divergence. We pull back, we break down, and we pull back. Interesting. Now I'm not going to take the time to draw the Fibonacci, but you could. You can visually see if we were to draw it from here to here, we retraced about 50%. And then she started down again, and then she broke and broke hard. Now, where are we? Well, if we draw the Fibonacci, as I will in a moment, from here to here, this would give us the area in which we would think is the bounce zone. This is an area for us to get short again. But if she goes up through this area, we will cover, we'll let her run back up and then prove herself that she can go higher. But we don't think so. Let me show you, and maybe visually you can see that what has suddenly changed. When we were going up, we had a swing low, a higher swing low, and a higher swing low. A swing high, higher swing high, excuse me, and even another swing high. But notice what's going on in the last few months. A lower swing high, and this one here is the swing low, but a lower swing low. So the direction of the market, the near-term direction of the market, has had a distinct change. Now, the stock pimps you listen to on CNBC and every place else, they're not going to take this time, and nor most people in the market going to take this time, but you are. Now, let me show you what we can do with those Fibonacci's again. We're going to come in here and get those Fibonacci retracement lines. We come up here to the obvious high. We come down here to at least the obvious low that we see near term, and we click on it. Now, we just mentioned the 50% retracement, which would be normal, would be right in here. It's actually this one right here. Let me highlight that color. I'll turn it into, let's turn it into something you can see on the computer. Maybe we should turn it white. And you can see it's 5416.13. That would be the expected bounce of this move from here to here. But you can see we had another high up here. What if we drew another Fibonacci from here to here? This area being what? The focal point. It's been tested, it's been tested and formed over time. So let's come down here, drawing, we get the Fibonacci retracement lines, get the right one, and we do this, and we bring it right down to the focal point, same spot. Now I want to know, what is the retracement from between here and here, namely the 50%. And we'll turn that white so you can see it online. There it is, 53.58. So between 53.58 and 54.16, that is an area that we would be most interested in getting short again, because we think that this move and this move down is still in play. However, if we do get above on a closing daily basis, not intraday, but closing daily basis, above 5400, 54.16 to be exact, then we may not be that interested in getting short. We may let the market play out, prove itself, take shape, and see what we have. And we may even cover because we're short up here and short up here because we had other tools to help us as well. But just on this chart itself, this would be an area next week where we would think the S&P will fail and take all the other markets with it. Where might it go? Well, for that answer, what we'll do is come to the Fibonacci's again. This time we don't use retracement, we use extension. And we grab the same point and we come to the focal point. And then we come all the way up. And let's think that maybe it gets to 54.16. So let's put it right here. We don't know, but let's think and plan that it might. If it rejects that level, the Fibonacci extension tells us that from this move, A to B to C, the likely extension is down here. 100% is 4834. The more likely target would be right in here. And that will color her green. Let's color it green. And that number is 4613. And even 161, because nobody is expecting this, would be 4476. That gives us that little, oops, I didn't mean to move that. I'm sorry. Meant to actually move the writing. See if I can move the writing. There it is. That gives us a little target zone. And we're just trying to get in the neighborhood because we're using options. When we trade out a week or two, we use options. We're just trying to hit the side of the barn. Get in the neighborhood. When we're trading intraday, we trade with surgical precision. This is on a daily basis, so it takes time for it to play out. We don't have any bearish divergence yet. So I'm not going to do what everyone else does and tell you definitively that the market is going to go up to new highs or that the market is guaranteed to go to new lows. The truth of the matter is nobody knows. But as traders, disciplined traders, we will play the probabilities. And the probability is on what we see and using other tools that the market is simply bouncing, and that in a downtrend, a bounce or a rip needs to be sold. And we will sell it, but we will manage our risk and we will trade in proportion. If you want to learn how we go about trading and you want these same tools and more on your desktop so that you can do what? Trade your game, not mine, not anyone else's, but yours. Be sure to visit stockmarketcaddy.com, and you are welcome to call me anytime between 9 a.m. and 9 p.m. any day at 813-758-8263. I wish you the best, and maybe we'll chat. Thanks.